Where do we take a $500 investment? We invested in people, and in 3 years we made $2.85 million. So how I invest my money is making sure that all my money is inside my life insurance policies. That's my financial foundation for my financial home, right? And then because of the business of current cash flow, it affords me to be more risky when it goes to stocks, bonds, and mutual funds. Some people, you know what they do? 100% of it is in the stock market. Nobody ever talks to them about that financial foundation. You know, for example, the World Trade Center, right? Years it took them to build the foundation. Years to build the first floor. Years, second, third. Right after that, boom, 60. But it took them years to build a foundation.
Save money is what?
Save money is money that you know you're not going to lose. Use your life insurance.
The life insurance is not going to be there for at least another 10 years.
5 years.
Yeah, well, it also depends on how you fund the policy.
Oh, okay.
Yeah, if you max fund the policy, you got access to your money quick.
Yeah, so I have policies that are just straight life insurance. But my policies that I put my money in for actual retirement or college savings, minimum death benefit, maximum cash. So I smash the policy down as much as possible. So I pay for the least amount of insurance for that death benefit, but I pack it with a ton of cash.
You consider your life insurance policies part of your assets?
Of course. Listen, the colleges, I got kids right now going to college. What money do you have in life insurance? It's an asset.
Out of my savings, which is all cash, what do I do with it?
So for me, I like liquid savings for operational expenses for your business. You know, hire employee, pay an employee, payroll taxes. It's in your savings. That's operational capital.
My cycle is.
Huh?
Let's just say my cycle on Tuesday, right?
Mm-hmm.
I already have, let's just say, $40,000 saved. So, but I have more coming. So out of the 40,000, how do I know where to distribute it at?
You have fixed amount of expenses, right? If you're counting on your cash coming in, you know you got your fixed amount of expenses. The other side of that is variable expenses. If the variable expenses exceed your cycle, then you got your operational cash capital to pay for those opportunities.
That's cash capital. That's not life insurance money. That's not
No.
stock money. That's not
Nope. Life insurance money, stocks, bonds, mutual money, it's tomorrow money. Liquid capital, liquid cash capital is for opportunities and operational expenses.
What percent would you say that should be liquid cash?
Well,
50, 40, 30.
30.
Yeah, 50, 40.
30.
You know, 50% of the money is gone. Right? And it's gone. We don't see it. The other portion, you pay your bills, tax, payroll, and all that stuff. At the end of the month, okay, we have a lot of money in cash liquid savings. Money inside the bank at 0.1% is lazy money. I got to make sure I deploy that money, so therefore it's working for me. Now, whether that be life insurance or stocks, bonds, and mutual funds, you have to reconcile that. I like having a lot of cash capital in the early stage of my business. So therefore, when opportunities are, for example, our office space, our landlord says, hey, you want this 12,000 square foot office? Sure, I'll get you a deal on it. But you have to put down a down payment, right? No problem. Here's my saying. Cash flow is king. Credit is queen. Cash, too much cash in the bank, that's a joker. Because it's lazy money. So you just gotta have liquid cash in there, enough for you to operate, and, you know, for you to feel confident as a business owner. If something happens and you're busy, you have 3 months, 6 months, 9 months, 12 months, that you can still recover from a downside in the business, or if an opportunity comes up. Like for example, next recession hits, I'm the bank. Last recession, 08 hit, a little over 100,000 in savings. You know, 150,000 in savings. Guy comes to me and says, Matt, I'm going through a divorce. I got this Bentley. Make me an offer. And you know what he says? I need money, so insult me. So in other words, he already knows I'm gonna lowball him. How much is the car worth? It's $120,000, $140,000 car. 50? Dude, well, you told me to insult you. I was about to say 40.
You literally asked for it.
So, come on. All right, 55. I flipped it. Sold it for 90. Made 20, 30 grand in a deal. I replenished my operational account. Client comes to me. I have to help out my aunt. I got to put her in a home. Property's on Harlem and North Avenue, River Forest in Chicago. Can you buy it? Can you make me an offer? No problem. What's the house worth? $140,000 house. I got 90. Where'd I get the 90 from? The car. Bought the house. Put 5 or 10 grand. I used Maddie's dad. We used Maddie's dad to rehab the kitchen and improved the furnace, flipped it for 160, 70 grand profit.
Actually,
Out
technically,
of
it was
55.
110 grand profit from the two
Yeah,
deals.
55.
Because you're really only about
Sure,
50.
sure.
No, 55.
55.
Right?
Yeah.
So those type of opportunities, or they just happen?
I don't look for them.
Those kind of fell in your lap.
Yeah, it fell in my lap. Right?
You do happen to structure in case those opportunities do come.
And I think that's exactly what he's saying. Is
That's what
that,
allows you to have those opportunities.
Yeah, he's in a position.
You put yourself in that position to succeed in those.
He's in a
and those
position-
those deals become more common
When you're
have-
available.
Yeah, when you
you're
have
ready
that
to take advantage
cash
of it.
capital to.
Cash in the bank is like oxygen, it's O2, right? For operations and for opportunities. Business expenses, taxes, staff, personal expenses. I mean, it's not the account that is growing into. I just want access to it if something comes up. Because that's, by employing money that way, that's my rate of return. My rate of return is when I do something with it, not when it's growing when I'm not doing something with it. Because I like our opportunity. Our opportunity in the insurance industry, where do we take a $500 investment? We invested in people, and in 3 years we made $2.85 million. I mean,
There's no better rate of return
than our model,
than our business model.
than our model.
It's an infinite rate of return.
And you know why? Because we have linear expenses. For example, I expand with you to Sacramento. Do I pay your office rent in a second? But you're happy with what you're making, right? But do I override your office? Am I incentivized to earn that override? So I'm incentivized to earn that override, but I don't have any overhead. So when I was in a seminar business, when I was in a traditional financial services, I had to put 10,000 pieces of mail out. If I did that today, 10,000 pieces just for postage alone, I think it's 55 cents for, it's $5,500 just for licking a stamp. For what? For 2 seconds to get my piece of mail and throw in a trash can. When I was a producer, I could never think like that. You know why? Because I was always so stuck in survivability. And if I wanted to expand my opportunities to get more clients, I had to expand my overhead. So instead of mailing 5,000 pieces of mail to get clients, I want to mail 10,000 pieces of mail. So instead of me making revenue first, I have to spend the money first. If I find somebody that wants to open up an office, guess whose office they're opening up? Mine. It's my brand, my office. They're working for me. I'm trapped in my overhead, I'm trapped in that model. I'm trapped in my business. Same thing like a doctor. A typical life insurance agent, awesome agent. Man, you guys look awesome. How much are your leads? How much are my leads? So you're in a business where you have to buy leads to get business, so nobody's ever taught you to self-generate? No, I've been doing it for 3 years. It's the biggest income in my life. Okay, good. I know you're coming from the hood, you know, you're making nothing and making 40, 50 grand on your own. It seems like it's a lot of money to you. Well, amen to that. That just shows that the people that you're around, they were not thinking as big as you are, and you're surpassing the income. You think you're big king shit. You're making 40, 50, 60,000 a year by buying leads. You live by the lead, you die by the lead. You know, give a man a fish and lead for a day. We teach him how to fish, how to self-generate. You live to get the lead by paying first in order to get. If you don't know how to self-generate, ask for referrals, build a market, be referable, have people remember you, be at top of mind awareness. Because we're teaching them how to self-generate, build a relationship, shake hands. You know, the biggest knock sometimes of our industry is that people make fun of our agents. Because agents are kind of awkward socially. Not all of them, but some of them. Why? Because they don't know how to really cultivate and build a connection relationship. Because they're too busy buying leads. They'd rather do that than really learning how to personally develop. So if I paid extra into my mortgage versus saving myself, and I come into a hard time, can I call my bank and say, hey, listen, I paid extra to my mortgage for the last 6 years. Can I get some of that money back? Or can you just apply it to the next mortgage payment? You know what I'm gonna say? Nope. Who's making money on my equity in my house? It's the bank. Because what do you think banks do when they get your money? Yeah, they reinvest it, they loan it back out. I'll give you an example. What's a savings account? What does it pay? Okay, 0.01. Okay, so you go to a bank, they pay you 0.001 to get your money. So what's a bank's job? Is to keep your money or to lend it out? Yes, so you go to the next desk, you ask for a car loan, credit card, bank loan. What do they loan you back to you at? 5%. Arbitrage, leverage. Who's making money? Who's making money by? So in other words, they're paying you 1% or 0.01%, but they're collecting 5. Who's making money on it? The bank, not you. Because I want to be the bank now. You know, it's so easy to spend your money fast. Quick Pay, Apple Pay, Venmo. What else? Cash App. So there's Cash App. There's so many ways for you to get your money to somebody, but it's not easy to get that money to you. And that's what we're teaching.